This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Holding pattern. It's the eve of two big events, testimony from former FBI director and the British elections. And investors still face a number of unanswered questions.
On the waterfront, the president wants to fix our water-based infrastructure, but who ultimately pays for public-private partnerships?
Price of admission. What would it cost to make college affordable for everyone? The price tag might surprise you. We have those stories and more tonight on Nightly Business Report for this Wednesday, June the 7th. Good evening again, everybody. Welcome. I'm Bill Griffith, and tonight for Tyler Matheson.
And I'm Sue Herrera. You could call it perhaps a sigh of relief, at least for now. The stock market, which has traded in a narrow range ahead of former FBI Director James Comey's testimony, rose slightly today when his prepared remarks were released, and there appeared to be no smoking gun, though more could come out during the full hearing tomorrow. Mr. Comey recalled a number of meetings and conversations, and one where the president said he needs and wants loyalty. His testimony was detailed, but it was interpreted by the market, at least today, as being less damaging than perhaps originally feared. So, when all was said and done, the Dow Jones Industrial Average added 37 points to 21,173. The Nasdaq was up 22, and the S&P 500 gained 3. Capping the gains, though, was an unexpected rise in crude inventories, which sent the price of oil tumbling, resulting in its worst one-day performance in 3 months.
Investors are also looking ahead to tomorrow's general election in the United Kingdom. The outcome could impact the economy, trade, and the country's exit from the European Union. Wilfred Frost is in London for us tonight.
The UK goes to the polls in a crucial vote in a matter of hours.
There we go.
And inside the pubs of London, it's the talk of the after-work crowd.
I am probably going to vote Conservative at the moment, mainly because I don't trust Corbyn.
Indeed, that is how Theresa May hoped the election would play out. Back in April, when she called the snap poll, she had a near 20-point lead.
We're saying...
But a widely criticised campaign has seen that lead shrink.
I'll be honest with you, I have changed my mind through the process, but I mean, I'm kind of siding now more to the Labour vote.
I think I'd enjoy Jeremy Corbyn being Prime Minister, actually. I think it would stir things up, to be a new approach.
That said, according to the latest average of polls by the Financial Times, Theresa May still has a 6-point lead. And in the last day or so, her slide has stopped, in part because of the recent terror attacks. So, overall, where do we stand?
Most people are looking, I think, for a 50-60 seat majority for the Conservative Party, and that's, I think, generally where people are settling in.
That would mark a victory after all for Theresa May, and a result that Sir Martin Sorrell framed as positive for business. For Nightly Business Report, I'm Wilfred Frost, London.
The global growth outlook is improving everywhere, that is, except here in the U.S. That's according to a new report from the Organization for Economic Cooperation and Development. The group is calling for the fastest global growth in about 6 years. But the organization downgraded its estimates for the U.S., citing delays in Washington's plans to push ahead with fiscal policy proposals like tax cuts and infrastructure spending.
Well, improving the nation's infrastructure was the message that the president took to Ohio today. His focus was on the nation's waterways and the critical role that they play in our economy. Morgan Brennan has more for us.
In Cincinnati, President Trump talked levees, dams, locks, and ports from the Ohio River, the latest focus of his infrastructure week.
Up to 25% of the nation's energy cargo relies on these channels and the refineries along their shores. But these critical corridors of commerce depend on a dilapidated system of locks and dams that is more than half a century old. And their condition, as you know better than anybody, is in very, very bad shape.
The inland waterways, nicknamed America's Water Highway, comprise 12,000 miles of freight network used by tugboats and barges to ship commodities like steel, coal, and grain. They're in such bad shape because many of the locks and dams were built during the Great Depression. That means more maintenance and gridlock, with nearly half of all commercial vessels experiencing delays. To fix this, Congress has authorized 24 projects, but only 4 have begun so far, and it will take nearly $9 billion to fund the rest. The Waterways Council and Infrastructure Advocacy Group for the River Network says currently it will take more than 2 decades to fund, unless the president can deliver on his plan.
We are very excited about the president's proposal to build these projects over the next 10 years rather than the current 20 to 25 years it will take with the current public-private partnership.
But the devil is in the details. Commercial operators already pay a fuel tax matched by the government. Trump's current budget proposal would double that. And there's also been talk of implementing a toll system. The council and those who use the waterways warn that could push up costs and dampen demand, further denting an industrial sector that's already been struggling in recent years. For Nightly Business Report, I'm Morgan Brennan.
So fixing the nation's crumbling infrastructure is a major focus for the Trump White House. And according to the New York Times, the administration is promoting the benefits of having local governments work with private corporations to fix our ailing roads, bridges, and airports. Matthew Goldstein wrote about it for the paper, and he joins us now. Welcome, Matt. Nice to have you here.
Good afternoon.
You know, on the surface, it sounds kind of like the perfect solution to aging infrastructure. But there's more to it than that, right?
Yeah, I mean, there are these public-private partnerships, which they call P3s, which have gone on around the country. And just in the New York area, the Goethals Bridge is being built with one. But there's this very limited track record. And in the U.S., some have worked and some haven't. And it's a very mixed bag at this point in time.
I always thought municipal bonds, that was the whole point of that, was for municipalities and others to raise funds for infrastructure. And especially now with historic low interest rates, it would seem more attractive. But is the attraction of public-private partnerships that it speeds up the process? Is that how that works?
Well, that's in part the theory, that you cut out a lot of the red tape because you're outsourcing a lot of it to a private company to sort of oversee it, and they can move quicker on contracting type of situations. But again, that doesn't always work. I mean, one of the things my colleague and I, Patty Comey, reported on was one of the deals is in Kentucky Wired, where they're trying to put broadband, a high-speed broadband throughout Kentucky, and they brought in Macquarie, big investment bank out of Australia to oversee the project. And that project's at least about a year or so going behind schedule right now for a variety of reasons. So again, sometimes these things work and they don't work out as well as planned. And, Europe has a much better track record with this, but part of that is because, as you said, they don't have as vibrant a municipal bond market as we have, which has been the main way to sort of do the financing for these.
So the bottom line is the fees basically have to come from somewhere. And
right.
Even if you have a public-private partnership, consumers may still end up paying either through tolls or parking or something along those lines. They pay either way.
Right. I mean, there are going to be tolls on it because eventually the money has to be paid back some way. I mean, some of the equity will come in from the corporations, but the tolls are going to go up. And like this, there's the Indiana Toll Road, which is a very famous example where the state got a big upfront payment of $3.8 billion. But now, and actually ended up going bankrupt, the initial partners in that, but the tolls have just recently gone up. They're doubling now because the state had subsidized them, and now to pay back the new operators of it, they've been able to increase the tolls by double. And obviously, that just happened a few days ago, so I'm sure that will have some impact, obviously, on motorists there, and and I'm sure it's going to be a big jolt for a lot of them.
Before we let you go quickly, besides the president, pounding his bully pulpit to encourage these kinds of partnerships, are there other incentives that can be provided to get private companies to participate with municipalities on certain infrastructure programs?
It's not totally clear because a lot of the proposals are not really laid out exactly how they're going to work. I mean, already you've seen, obviously, Blackstone is gearing up. Right. They're raising a $40 billion fund. Lloyd Blankfein tweeted yesterday that clearly Goldman wants to get in on this. There's obviously a lot of interest. But, I actually this didn't get into our story, but I talked to one money manager I know, and they recommend to a lot of high net worth investors. And they actually don't go into a lot of these infrastructure funds because they don't think the returns are often as good as they seem. And often, in a lot of cases, these projects don't always end up panning out and getting funded. So I don't know. I think it can be a solution. I don't think it can be the full solution to it. And we do have a major infrastructure problem, obviously.
Yep. And the devil is in the details.
Yep.
Matthew, thank you very much.
Thanks.
Matthew Goldstein with the New York Times.
In Kansas, by the way, the legislature voted to raise tax rates, essentially putting an end to a series of cuts there. Republican lawmakers broke ranks with the governor and overrode his veto of that bill to increase taxes. And as we reported, Kansas overhauled the state's tax system back in 2012, and it was billed as a real live experiment in conservative governance. But the economic recovery from those tax cuts never materialized, and the state found itself unable to balance its budget and fund its public schools.
Still ahead, how much would it cost to make college affordable? A new study has the answer.
After numerous reports earlier this year suggested that auto dealers and lenders were writing too many loans to those with spotty credit records, a new report now paints a different picture. In fact, lenders hit the brakes on the number of subprime auto loans that they issued in the first quarter, sending them to a near 10-year low. Phil LeBeau has more on the changing dynamics of who is buying a car and a truck right now.
With auto sales starting to slow down, there's a greater focus on who's buying cars and trucks right now, and can they afford the loans they're taking out. Over the last 2 years, more borrowers with the poorest credit records have been unable to make payments, and they've been defaulting on their loans. Perhaps that's why lenders have hit the brakes on subprime loans. They plunged in the first quarter, while lenders did more business with those who have the best credit ratings.
We've been hearing just here and there over the last year and a half, various lenders coming out and saying that they were really going to restrict subprime. And as those lenders came out and made those statements, it seemed to trickle down into other lenders in the industry, and others seem to follow suit.
Tighter credit in the showrooms comes as automakers are adjusting their production schedules and the supply of vehicles rolling into dealerships. While inventory levels are slightly higher than normal, this is an industry showing greater discipline than it has in the past, and that's changing how aggressive dealers can be when it comes to writing loans, especially since 25% of all auto loans are to subprime borrowers. But make no mistake, dealers are still trying to come up with a payment the customer can afford. Increasingly, that means extending how long it takes to repay the loan so the monthly payment is as low as possible.
On both new and used cars, we see the most common loan term is 72 months, but the percentage of loans, both new and used, that are financed between 73 and 84 months continues to grow.
Right now, the average monthly payment for a new vehicle is $508, according to Experian. For used vehicles, it's $363. Both are slightly lower than what subprime borrowers pay each month. But for everyone, the monthly payment keeps moving higher because the cost of cars and trucks, new and used, continue to rise. Phil LeBeau, Nightly Business Report, Chicago.
And to read more about auto loans and the car market right now, head to our website at nbr.com.
And from auto loans to home loans, mortgage rates dropped last week to their lowest level since the presidential election. That caused a mini rush on lenders, not just for traditional 30-year fixed loans, but also for adjustable rate loans. Diana Olick has more from Washington.
Borrowers saw an opportunity in the mortgage market and jumped right in. Despite all the talk of rising interest rates, rates have actually been falling lately, and last week dropped even more. The average rate on the popular 30-year fixed came down to 4.14%. Now, just as a reference point, rates jumped from 3.77% to 4.16% in the 2 weeks following the election last November. The drop last week caused a big rush from potential buyers. Those mortgage applications jumped 10% for the week. Refinances got a small boost too, up 3%, but they're far more rate sensitive, and rates were lower for the bulk of last year when so many people already refied. Interesting in the numbers, a big jump in those borrowers applying for adjustable rate loans, up 26% from a year ago. ARMs carry a lower interest rate, so this is a sign that borrowers are really trying to use every tool available to afford today's pricey homes. One caveat, these ARM loans are not the super risky, no documentation loans of the past. ARMs are fully underwritten today with strict credit and debt limits. They are, of course, riskier than a 30-year fixed. For Nightly Business Report, I'm Diana Olick in Washington.
And from home loans to student loans now, a new report out today from the State Higher Education Executive Offers Association says it would cost just $34 billion to make college financially accessible to all students. David Tanberg is principal policy analyst and author of this report. He joins us now to discuss his approach to college affordability. David, thanks for joining us tonight.
Pleasure to be here.
Now, as I understand it, affordability is defined as 10% of a graduate's income going to paying off a student loan. That's when it's considered affordability. So this $34 billion, it sounds too good to be true that it would make college affordable for all students. How would that work?
Well, to clarify, we're focused on lower income individuals. And so we're talking about folks that reach no more than 200% of federal poverty levels. And so those are the individuals we identify as having a particularly difficult time paying for college. And so we costed out what it would take to bring them within that 10% threshold.
You also took a look at states and the differing characteristics of those states, that some of which do allow for basically tuition-free college. New York has been very aggressive on that front. Other states in your study were not as effective as providing that. Why is there such wide disparity from state to state?
That is a great question, and we're an organization of chief higher education officers in each of the states, and so we recognize and feel it's important to recognize the diversity of the states. And so when it comes to college affordability, these factors are driven by state economies, demographics, culture, history, and so in some states they have robust need-based financial aid programs, and you highlighted one being New Mexico, right? Others haven't had a strong tradition of providing financial aid to low-income students and may not have mechanisms to keep tuition low. And so we find that they're further off from that affordability threshold.
Where would the $34 billion come from?
That's a great question, and we consider it a federal-state partnership. And you know, in some states, they're a long ways off, and so it's going to take a number of years for them to come up with their half of that cost. In other states, they're much closer, and so it would only take, say, on average, nationally, about a 5% increase in what states are already providing. If they did that 5% increase over 4 years, nationally, we would reach college affordability for those low-income students. Now, that's not the case in every state.
Right. Well, it is something to think about. David Tanberg, thank you. He's with the State Higher Education Executive Offers Association. Thanks for joining us tonight.
Yeah, thank you.
The strong dollar gives Brown-Forman a hangover, and that's where we begin tonight's market focus. Profit and revenue fell at the spirits company, with both missing analyst targets. Brown-Forman said the sale of its Southern Comfort brand hit results. Despite the miss, the distiller did note that demand was strong for Jack Daniel's whiskey. Brown-Forman shares, maybe investors needed some whiskey today. They were off 3% to $50.70. Sales rose more than expected at home decor retailer At Home, with the company saying it saw strength across new and existing categories. Earnings also saw gains and matched estimates. The company also raised its revenue guidance for fiscal 2018. Shares took off. They rose more than 21% to $22.53. Biopharmaceutical company AbbVie said it saw promising results for its experimental rheumatoid arthritis drug in a late-stage clinical trial. The treatment is intended for patients with moderate to severe forms of the disease who have not responded enough to certain drugs that slow the progression of joint damage. AbbVie shares were up 1% to $68.75.
Truck and engine maker Navistar reported a wider than expected loss as weaker truck sales were a drag on those results overall. Revenue was lower, but it was still good enough to top expectations, and the company acknowledged it does have some improvements to make, but it expects industry conditions to improve in the second half of this year. After all that, shares fell by 1% almost to $29.64. United Health Group hiked its quarterly dividend 20% to 75 cents a share. The yield on that stock now is 1.7%, and shares gained 1%, following the news to $183.21. And after the bell, Tailored Brands posted profits that topped street forecasts, but revenue came up short. The owner of Men's Warehouse and Joseph A. Bank reaffirmed its full-year earnings for this year. Shares were volatile in extended hours, ended the regular session, though, up more than 5% to $11.22. Coming up, what's worrying the job creators of America? Small business owners will tell us next.
Here's a look at what to watch for tomorrow. As we reported, former FBI Director James Comey will testify before Congress as part of the investigation into Russia. Voters will head to the polls in Great Britain to select their next prime minister. Members of the European Central Bank will meet to discuss monetary policy, and that's what to watch for on a busy Thursday.
Could it be any busier tomorrow? Meantime, Goldman Sachs is raising rates for savers. The Wall Street Bank's consumer arm is raising the rate it offers customers on deposits to 1.2%. That makes Goldman the highest interest-paying bank right now, according to Bankrate.com. The firm is trying to increase its deposit base and attract Main Street clients. By the way, the average rate right now for savings accounts, it's not a whole lot, currently 0.06%.
Small business owners are considered the backbone of the economy. According to the Small Business Administration, this group has provided about 2/3 of all new jobs since the 1970s. And today, innovators and entrepreneurs are in New York talking about the current state of business, and Kate Rogers is there.
Entrepreneurs from around the country gathered in New York City Wednesday for CNBC and Inc. magazine's Iconic Tour 2017. The topics at hand: how to grow your business, find the right people, and thrive. In fact, one industry veteran dropped an important reminder: it's never too late to get started.
I'm 66, and I don't think there is any age limit to entrepreneurship. I think, in fact, when you're older, as I am, it's just a great time to launch something new. And that was one of the sort of motivations for me. I said, if I'm going to do it, I have to do it now.
With small business optimism holding at historically high levels post-election, some small business owners in attendance said they were feeling confident about their business prospects and the economy under President Trump.
I'm absolutely optimistic. I'm making sure that people are more efficient and just good at what they do is so important right now, that in spite of some of the things that are going on politically and just with our economy, that's so important for an organization.
As long as you're within an affordable price range and it's not a luxury item, I think there's always going to be people that are looking for something that's fun, that's innovative, that's unique.
Others have concerns about potential changes the new administration may bring in terms of new regulation.
I want there to not be an immigration ban, primarily because when companies are started, they're started by everybody, and that creates business for the marketing services providing industry.
But some, like Cole Austin, whose business Collab is rooted in the arts, are hopeful that political headwinds may help to bring people together.
When you have so many polarizing topics that exist right now in the world, it's the best way to kind of, the most catharsis thing to do is to continue to create and to share your opinion and perspectives. And so I think it actually, as unfortunate it may be in the political space, it's actually great for community and self-expression.
For Nightly Business Report, I'm Kate Rogers in New York City.
And that is Nightly Business Report for tonight. I'm Sue Herrera. We want to remind you this is the time of year your public television station seeks your support.
I'm Bill Griffith. We do thank you for your support. Have a great evening, everybody. We'll see you tomorrow.